Hello traders, and welcome back to Explain the Charts. Today is Thursday, October 23rd, 2025, and we are diving deep into one of the most watched stocks in the world, Apple, ticker symbol Apple. It has been an incredibly volatile week for the tech giant, soaring to a new all-time high only to pull back sharply in the last couple of days. In this video, we'll first cover the crucial news and current events driving this price action. Then, we'll get into a detailed technical analysis of the charts to identify key levels and potential future moves. Let's get started. The news cycle for Apple has been a mix of extremely bullish sentiment and recent cautionary flags. The biggest story, which fueled this week's rally, is the continued reports of surging iPhone 17 sales. Multiple sources, including Counterpoint Research, have indicated that the new lineup is significantly outselling its predecessor in key markets like the US and China. This fantastic hardware news prompted a flurry of analyst upgrades. Notably, Loop Capital raised their price target to an ambitious $315, and Evercore ISI added Apple to its tactical outperform list with a $290 target. This wave of optimism was the primary catalyst that pushed the stock to break out of a long consolidation pattern and hit a new all-time high of $264.38 just this past Monday. However, the market sentiment has shifted in the last 48 hours. News emerged that Apple is facing a new EU antitrust complaint, which has introduced regulatory uncertainty and spooked some investors. This seems to be the main driver for the drop we saw yesterday and the weakness continuing today. We also have some lingering concerns about Apple's AI strategy, with some analysts feeling they are still lagging behind competitors like Google and OpenAI. Finally, the entire market is laser-focused on Apple's upcoming quarterly earnings report, which is scheduled for release next week on October 30th. This will be a massive event, providing official data on iPhone sales and guidance for the critical holiday season. Now, let's see how all this news translates on the charts. Looking at the daily chart, we can see the bigger picture of a very strong and persistent uptrend throughout the last year. After consolidating for several months, the stock found major resistance near the previous all-time high of $260.10, set back in December of 2024. This level acted as a ceiling for quite some time. Then, on Monday, October 20th, we saw this massive green candle on enormous volume. This was the breakout candle, driven by the positive iPhone news, which pushed the price to a new record high of $264.38. A breakout on high volume is a classic sign of strength and confirmation of the move. However, the follow-through has been weak. The last two candles, for yesterday and today so far, are red, indicating a pullback from those highs. This is where key levels become critical. The most important level to watch right now is the breakout point around $260. In technical analysis, old resistance often becomes new support. So, for the bulls, it is absolutely crucial that this $260 level holds. If we see the price bounce off this area, it could be seen as a healthy retest before continuing higher. If the selling pressure continues and we break below $260, the next significant support area is around the $255 mark, which corresponds to some recent price congestion. A more severe breakdown could bring us towards the September lows around the $226 to $230 area, though that seems less likely without very negative news. On the upside, the resistance is clear, the all-time high of $264.38. A break and close above that level would signal a continuation of the uptrend, entering a phase of price discovery with those analyst targets of $290 and $315 as potential psychological milestones. Now let's switch to the 1-hour chart to analyze the short-term price action in more detail. Here, we've filtered the chart to show from the breakout on Monday until today's session. You can clearly see the explosive move up on Monday, followed by consolidation near the top on Tuesday. The momentum shift is very apparent starting yesterday. We see a series of lower highs and lower lows, which defines a short-term downtrend. The price decisively broke below the $260 level yesterday, which is a bearish short-term signal. Currently, the stock is trying to find its footing around the $258 level. The low of yesterday's session was $255.43, and that is the immediate support level to watch on this time frame. If we lose that level, the selling could accelerate. For any bullish reversal to take hold, we first need to stop making lower lows. Then, buyers would need to push the price back above the $260 psychological level and hold it. A move above yesterday's high around $262.85 would be the first sign that the bulls are regaining control in the short term. Drilling down even further to the 15-minute chart, we can examine yesterday's intraday trend. The selling pressure was consistent for most of the day on October 22nd. After opening strong near $262, the price trended down throughout the morning and afternoon sessions. We can see a significant drop around midday, where the price fell from around $259 to below $256. There was a small attempt to bounce in the late afternoon, but the bulls couldn't sustain any momentum. The price closed near the lows of the day, indicating that sellers were in control right into the closing bell. This intraday action reinforces the bearish sentiment we've seen in the last two sessions. Traders today will be watching to see if the price can establish a base at these lower levels or if the selling trend will continue. Okay, let's switch back to the daily chart and recap what we've learned. The long-term trend for Apple is undeniably bullish, but the short-term picture is bearish after a failed follow-through on a new all-time high. Here are the key price levels to watch. Immediate resistance is the all-time high at $264.38. The most critical pivot point is the former resistance, now potential support, at $260. Below that, we have minor support at $255 and more significant support in the $226 to $230 zone. So, what are the potential scenarios? The bullish scenario, which I'd give a 60% probability, is that this is a healthy pullback and retest of the breakout level. If support at $260 holds and we get positive news or a stellar earnings report on October 30th, we could see a swift move back to the highs and beyond. A strong bounce from $260 on increasing volume would reinforce this outlook. The bearish scenario, with a 40% probability, is that this breakout was a bull trap. If we lose the $260 support level decisively, especially on high volume, it could signal a deeper correction. A disappointing earnings report or escalating regulatory issues would be the catalyst for this move, potentially taking the price down to $250 or lower. The number one thing to watch for is the upcoming earnings report on October 30th. It will likely dictate the direction for the stock for the remainder of the year. Until then, watch the price action around the $260 level very closely. That will be your best guide for short-term sentiment. That's our analysis for Apple today. Remember, this is not financial advice. The markets are complex and you should always conduct your own research and due diligence before making any investment decisions.